and I'll take it down into a lower time frame. And the first trade that was tradable was ticker symbol CARA, and here it is here. So there's the cat at the open. You can see this opening test drive trade right there. There's the opening, there's the close and the open right there. So there's the pre-market price close, there's the opening price there. A buyer comes in straight from the open, it tests lower on the opening candle. Your job is to buy it at 55 to 60s. And that's your job, to buy it at that price. If you don't get it at that price, you just pass on it and wait for something else. Opening test drive is a test to the downside and then a drive to the upside. If it holds on to this drive, of course, this is going to be a trade that you're going to come back to again and again, potentially a few times over the course of the morning session. We go from $26.50 up to a high print of $27.80, reasonable profit for an opening drive. And obviously once that top is in, that's you now got your opening drive in place. And obviously once that price starts to pin into the top edge, you start seeing some selling coming in repeatedly at the same price. Then obviously your job is to take some of your monies out. Now that's not much of a profit. It's about 4% return on your money, but it's still 4% return on your money. It's only taken 3 minutes, so I don't think you can be too grumbly about it. As the price trades back into the opening test, of course, this is where your opportunity to buy back in again becomes pretty obvious. You start watching for that opportunity to buy again, and obviously the takeaway from that was again another reasonable profit away from that price. You can see we come back up into that same opening top edge, and we take another bit of profit as we come up into that based on the fact that we start pinning badly in the same opening test, the drive location. And what happens next? We come all the way back to the opening test drive again. So that's your next opportunity. Once you start seeing some buy response coming back in, that's your next opportunity. Now, on this occasion, it fails on its auction. You start recognizing selling repeatedly coming in at this price, and you say, okay, well, that's not going to work out for me. When the price doubles back and it starts closing back inside value, you just close off the trade, and either you're waiting for a lower price to buy back in again, or you just finish up for the day on that particular stock. But sometimes they like to just run the stops. When you see that running the stops and it coming back up again, you take another punt on it. And obviously that's how you sometimes capture their game players, because they're running the stops, trying to get you to throw away a perfectly good position. And just once you see it rejecting at those lower prices, that's another test into the bottom edge. They're testing the bottom edge. If that test is rejected, you come back in again and you buy back in again at same 55s. And that 55 is just traded up to the 10s. And I know it doesn't sound like much, but it's still another 2%. If you made 4% on this trade and 4% on this trade and a couple of percent in this trade and 2% in this trade, that one stock's done you 10% this morning, guys. Which is, well, I would imagine in most people's books an absolute rip-roaring success, of course. If we look at the final cats of the day, which gave us there was only two that gave us an opening test opportunity, and it was this trade here. It was ticker symbol fun. You can see there's the opening test at the bottom edge. So there's the close. There's the open. There's the drive to the downside. If it goes back above that $2.15, that's your buy trade. So you're now in a buy trade at $2.15 right there. It drives up, continues to drive up to $2.45, and that's a 30-cent profit on a $2.40 stock. That's over 10% return on your money on that little trade. There's the high of the opening drive right there. So obviously you're going to be watching the price in this area again. You can see some pretty heavy volumes, considering everything else that's going on. That's very heavy volumes. You want to analyze that in a little bit more detail. The big volumes up here, you don't want to buy it down here. If the big volume's at the bottom, you want to join in with the buying at that stage. So you buy back in, you see it has no response, and at that stage you say, you know what, it's going to go lower. We'll take it out for the time being. Let's see what happens. It goes a little bit lower. You can see it's just kind of hovered around this level, It's not really done very much, and it's just kind of drifted its way through the bottom edge here, and that's the end of that trade. It's not a bad outcome. It's not as good as the Cara trade. That's the only one that's really held any weight for us this morning. And, you know, we're obviously still aware of it. We're still aware of the fact that this level is still problematic for the buy trade to develop. And you can see just coming back into that, it's finding a bit of a supply coming back in again, people taking quite aggressive profits at that stage, isn't it? So, yeah, it's a good one. It's good enough. You know, we've seen better, but we've also seen an awful lot worse, guys.